Hey guys, thank. Are you here? Is everyone here? Yeah. Anyway, I think I'm live. Anyway, hey guys, thanks for being here. I just got a notice that said I wasn't live. All right, so I think it means I wasn't live on X yet. So now I'm live on X as well, but I've always been live on YouTube. All right, guys, we have Bon in the house already. Hey, thanks for being here, Bon. Hey, remember, this is not financial advice. Consult a professional financial advisor. All right, let's get this show started. All right, so how's everybody doing tonight? All right, let's look at the market. I didn't have an afternoon show on. Bitcoin was down today. It's up a little bit. Right now, it's up 19 bips right now. Bitcoin pulled back. SPY kind of closed. SPY closed lower and closed on the lows for the day. That's not a really. Let's look at the daily bar. This daily bar left behind a rejection tail up here. It's really just kind of a. Looks like kind of a non-event, but let's look at the Q's daily bar. Anyway, I was doing a new video today, and I put it out right when the afternoon show was on. I'm sorry it didn't come on, but hopefully you guys got to see the new video. All right, so the Q's bar looks just exactly the same as the SPY's, basically a nothing burger. And okay, and these are, well, now I have a shorter term chart so we can see, but it's also a nothing burger. There's a trading range right here centered around 25.3, and that seems to be where we're trading. It seems like 25.4 is too low, 25.2 is too high, too low, 25.4 is too high, and the middle is right about 25.3. That's where we've been for the past 2 days, and we were there a couple of weeks back. It's been a trading range we've been in before. Anyway, we're back in this one. At least we aren't in this lower one. We need to move up to a higher trading range. Maybe tomorrow we'll take a jump and bulls try to get us up here stuck in a higher trading range. All right, now let's look at a 30-minute chart of Bitcoin. Now, Bitcoin is definitely has a reversion to mean. Look at this. Look at this distribution of the volume, of the recent volume. And by recent volume, I guess we're talking, yeah, this is just this year. It blows my mind we were at 98 earlier this year. I mean, just like a month ago. I mean, that's not great. That's not great. That is a big and a fast drop. It's not really near as big and not even near as big or fast as this drop. Or I don't know. This drop was a little bit slower, but it's been ugly. Bitcoin is ugly lately anyway. The price action is ugly. All right, let's check out gold futures and silver futures. Gold futures up 0.5 point. Silver futures are up 3/4, up almost a point, 7/8 of a point, more than 3/4. We'll call it 7/8. All right, the daily factor. Let's check out the daily factor. Let's go get the graphic. All right, so what we have T for Tuesday. Now, of course, let me get that thing off the screen. All right, T for Tuesday. The daily factor is based on my own metric. This is, I think, a better way to rate these funds than I know it's a better way than looking at yield, and I would even say it's a better way than looking at total return. In any event, let's see who our contestants are. We have TSYY. So let's see here, TSYY. Let's take a look at the FinViz for TSYY. I mean, FinViz is saying it pays a 259% yield. That's impressive, but it'd be better if the NAV didn't drop from, 12 to $4.53 in the past year. So let's look. Of course, it's based on Tesla, and it's based on leverage. But Tesla hasn't been doing that bad lately. This thing's kind of a mess. TSYY. Let's look at it this way. And then let's overlay the parent. The parents actually had a pretty good. Well, this is kind of how it works. I mean, parents up 33%. This thing pays a nice yield, and it's only up 2% because because it's been paying you a yield. The difference is the yield, basically, and whatever it may have had some volatility decay due to the leverage. Some there's another word for it besides volatility decay. Volatility drift or beta drift due to the volatility. Now, depending on what time you go back to, it can be closer. I mean, TSYY, I'm sorry, did rally when TSLA did, but in fact, TSYY was up about 8.48% based on this starting date in a time when Tesla was up about 14 or 15%. All right, so back to the factor. All right, TSLW. So this same thing based on Tesla. It is from Round Hill, and this one also uses a little bit of leverage. Also pays an obscenely high, not really obscenely, but it pays a high yield, partially due to the leverage, and partially due to the Tesla has a lot of volatility, and you can sell Tesla options for a pretty penny. But these guys are, in addition to that, using a little bit of leverage. And also, they aren't really selling options; they're using swaps. But it's fine. It's just another way of making an income. It's another strategy for paying yourself an income in retirement. This really isn't a covered call fund, though. But it does well on the way up. Then we have TS2. This is based on Tesla also. This is from Rex Shares. And this one pays a more reasonable yield, 61%. The NAV is still, the NAV's down 18% this quarter, which actually isn't as bad as TSLW. Kind of surprises me that TS2 is doing worse than TSLW this quarter. Generally, TSLW, based on just watching it every day, TSLW generally outperforms the Rex shares on the way down by a little bit. But maybe generally that's true, but maybe not always. Anyway, then we have TQQY. So this one is actually based on the Qs. This one is, so with the Qs, in other words, the NASDAQ, but it's leveraged NASDAQ. Pays around a 60% yield. It's about twice as volatile as the market. Now, this one right here, TQYY, is the least volatile of the four we've looked at so far by quite a bit. And one thing, because it's based on 100 stocks instead of one stock. Then we have TSMY that's based on Taiwan Semiconductor. This thing's actually up on the quarter. Great job, Taiwan Semi. Yielding about 50%. Then we have TSLY. Now, this is based on Tesla, but it's unlevered. So usually the unlevered, so I would expect TSLY to do better than TSLW in a bad quarter, at least on NAV, and TSLY, it did better, but not a whole lot better. I mean, only about a half a point better. It's not that impressive, really. TSLY, I don't know what you're doing, TSLY. That's a pretty bad look, actually. That's the one good thing about the max yield is it usually acts as a more of a buffer on the way down. So, but let's look at TSLY versus TSYY. Or let's look at, I guess, TSLW. So that's Round Hills LW, and of course, Yield Max is Y. All right, so yeah, that's a good look for Yield Max. But that's what I said. I would expect Yield Max to do better on the way down, and the other one to do better on the way up. So just figure out which way Tesla's going, and you'll know which one's better. Okay, TSLP. Now, TSLP is also based on Tesla, but it's from Curve. Curve tends to be a little bit more conservative traditionally, although if you look at TSLY's yield right above it is 29%. This TSLP's is 28%. So really, I think these would probably be pretty evenly matched. Okay, so let's just run these against each other. TSLY and TSLP, Yield Max versus Curve. I would expect Curve, frankly, to win this one. Yeah. Yeah, it definitely won that one. The NAV did a lot better. Of course, the NAV did a lot better too, and that's what Curve is known for, is for giving you back more of your money in NAV, where you get more of your money back in the form of distribution, generally from Yield Max. So, all right, then we have T-SPY. Now, this one is based on the SPY. It's from Tap Alpha. This one does a nice job. Yields about 13-14%. NAV's down 1% on the quarter, so that's great. 1 year total return is 11%. This one's a nice looking fund. Those are some good metrics right there. Then we have TLTW. This is based on the TLT, which is bonds, and this is a covered call fund where they sell covered calls on the TLT. So this thing yields about the same thing that T-SPY does. But you could see the volatility of the bond-based one, TLTW, is about 50% less, 40-30% less than T-SPY. Well, T-SPY is based on the market. The stocks are generally more volatile than bonds. So, and sure enough, that relationship holds true there. Now, TLTW's NAV is down 2.2%. But if you look at the 1 year total return for both of them, T-SPY was up 11.7, TLTW was up 10.3 last year. So that's good. Next we have TDAC. Now, TDAC is all by the same people that manage T-SPY, Tap Alpha. This thing pays about 13%, does a nice job. NAV is actually positive on this one. We don't have a year's worth of data on this. And the volatility is about a 16, which is, a little bit elevated compared to the SPX traditionally or typically. All right. And we would expect that because it's based on the NASDAQ. Then we have TLTP, the same thing as TLTW, or it's based on the same underlying TLTP. So let's just look at them here. All right. Well, that right there is a really good look for TLTW. So let's go look and let's check this out here. Or let's look at the P1. The P1 was, it's Amplify. I wonder why the Amplify one isn't doing better than that. It's kind of alarming. Amplify is, a good company, and this is a target, so they only try to pay 12%. So, on the other hand, paying 12% from bonds, which are really low volatility, might be kind of hard. It obviously is kind of hard. Look, they're killing their own NAV, evidently. Now, of course, but you also have to factor in what's the underlying doing, what's the TLT doing. TLT's been basically flat for a year. I mean, it's gone up and down, but I mean, it looks like it was about 90 a year ago, and it's about 80.5 now. Or is it 90 last April, let's say? Not quite a year ago, but that's last, yeah, and that's like the last day in March or something, it looks like. So that's, about 11 months, something like that. All right, but the TLTW is a lot better look than that TLTP, I'll tell you that. And you can just tell the look in here. The nav looks closer to TLT's nav. So these iShares, it looks like the iShares is doing a better job. However, let's look. Maybe the iShares doesn't pay as much. I bet that's what it is. Okay, they both cost the same, so it's real easy to figure out, and that's actually wrong. The iShares pays more. Yeah, this is free money compared to TLTP. Just because there's no free money, but compared to the two of them, somebody stuck a gun to your head and said you had to buy one of these two. I mean, and you can go backwards in time and get these results. TLTW is free money on TLTP in the sense that you get better NAV and better yield, which that's not supposed to happen. That is not the typical arrangement of things. All right, so let's see. TDAC, TLTP, we talked about those. Tuggin, TUGN. All right, so let's look at some Tuggin. Well, let's look at it here. I mean, that's a good looking fund. Look how fast Tuggin recovered its, its pullback low, or its pullback that's high. It's pre-April high, however you want to look at it. Now it only pays about 11.77%. Has a lot of red on the chart over here. Year to date, the NAV's down 2%. For the past year, the NAV's flat. The NAV's only plus 2.2. But remember, you also had this dividend. So you look over here at total return. What's total return? NAV return plus yield. NAV return is right here, which is flat. Yield is almost 12. Total return is 12, a little bit more. Great job. That is a good looking fund. Let's see what else we have on the lineup. We have TDVI. This is the one I was talking about this morning. This, I think, I was trying to tell somebody, I think it was Marcus, about some hotshot dividend fund that somebody told me about. And this was actually the symbol I was thinking of. I just could not think of it. But yeah, TDVI. But we talked about a lot of other good dividend funds. But man, this thing is, I mean, it only pays 7.3%, but for the past year, it's up 14% NAV only, not even factoring in that 7.5%. So what does that make the total return? It makes the total return somewhere around 14 plus the yield, 7. And sure enough, there it is. Total return for a year, 24%. Pretty close. Yeah, TDVI, the First Trust, Vest Technology Dividend Income. Okay. And the last one is TLTI. Okay, now this one is from Neos. So let's see, the yield is the lowest one on the board. So if this one doesn't do, this one should absolutely, low yield, it should absolutely spank TLTW or TLTP. I mean, if in the sense, other things being equal, in the sense that it's not taxed as highly, its NAV's not taxed as highly, but no. TLTW is, what is TLTW doing? Are they using leverage? I mean, but if they're using leverage, you think they would look worse on the way down and stuff. But the bond market's been bid the past quarter, so maybe they do use a little bit of leverage or something. Maybe they're using lightning spreads. I don't know. Health and Wealth's here. Thank you for, and of course, Bond, and we got Dividend Degenerate in the house also. Okay, so we got one more contestant. Oh no, that's all our contestants. Okay, so let's rank these guys by volatility. Which one's which one's the safest? on paper, TLTP, TLTI, and TLTW. Well, I don't care how safe TLTP is. I'll take TLTW. But they're all, I mean, they're all right here, 7, 6. If you ever remember the VIX being at 7 or 6, no, because it hasn't been, I don't believe. But that's, and the reason is because the market's never been that steady. But now the stock market's never been that steady. But the bond market, on the other hand, is probably about half as or twice as steady as the stock market, give or take. It depends. Anyway, then we have T-SPY hanging in here at 11.8. That's a good market type volatility. Tugging a 13, that's market volatility. TDAC is 16, which is fine for NASDAQ. But then all these ones above it, TQQY is a 25 volatility. That's it. That's getting pretty volatile. That means that this fund could easily be up or down 25% in just a normal year, just an easy normal year. The most volatile one is TSLW. It's based on Tesla, and it uses leverage, and it's a 47 on volatility, meaning that it wouldn't be at all surprising for this ETF to be either up 47% or down 47%. But if the SPY was up 47%, that would be really surprising. That would be a big deal. If the SPY was down 47%, same thing. That would be like, oh, that's, not that it couldn't happen, but it's a harder thing to conceive of. All right, so that's the volatility. The NAV return, there's only 3 of them that are positive. It's TSMY based on Taiwan Semi. Taiwan Semi's been a good one. So let's look at the MOXY, and of course Taiwan Semi is leading the MOXY factor. TLTW second, and that TLTW just looks good on paper. I mean, that when you're comparing it to the other TLTs, it really looks good. All right, let's look at the Quandex, which is the 1-year max factor, basically okay, and it's TSMY. How are you going to give it to anyone else? I mean, TSMY had a 42% 1-year total return. It's volatile, granted. It's about twice as volatile as the market, but it's also based on one stock that's in Taiwan that makes semiconductors. So it's understandable. Really, it's pretty good I think it's impressive it's not more volatile than that, given the fact that it's in Taiwan in a tech company. TDVI is looking really good on the daily factor also. So let's do this. What was the one we were talking about dividend funds today, and I couldn't remember TDVI, and I finally said TDVI. I think I finally said SDIV, and then somebody else said NDIV. But I thought TDVI was SDIV. But SDIV and NDIV were actually really good, really performed well lately. Let's compare them to TDVI. TDVI is darn impressive against SDIV. Now let's compare it to NDIV. If you guys saw the morning show, you remember this. Yeah. With TDVI is man, that's impressive. Let's compare it to Divvy. Yeah. TDVI is impressive. Okay, so let's declare the max factor. Let's declare the winner. So we're going to short it by short-term max factor. All right. Number 1 is TSMY, according to the metrics, and we have a 50% yield, decent volatility. Like we're just saying, pretty low volatility considering what it does, where it is, what business it's in. Hard to argue with that one being number 1. TDAC number 2, I mean, this one's good. I mean, NAV's good. The yield's solid. It's well managed. And the market volatility is 16.8, that which isn't bad for the NASDAQ. So then we have TDVI. So this thing is just really impressive. It's actually about the same on vol as TDAC, but it pays about half the yield. So yeah, definitely TSMY is going to stay number 1. TDAC is going to stay number 2. But TDVI, if you're looking for something that pays a real dividend, is looking pretty dang good. Let's look against SCHD. I mean, and this goes back pretty far too. This goes back to August of 2023. It's not like it just goes back 3 months or something. I mean, that's pretty good. Now let's say this though. SCHD did a lot better job of protecting capital. It looks like SCHD dropped 7 or 8% in this little pullback, just eyeballing it. And this thing dropped much more, probably twice as much, 15% or something. So TDVI kind of volatile. And of course, we'd expect that because what did I just say? I said it was about as volatile as TDAC. TDAC's about as volatile as the NASDAQ. So TDVI is like a market level volatility. In fact, let's just compare it to the NASDAQ. Let's compare TDVI to the NASDAQ to kind of illustrate the market level of volatility. Yeah, and you can see it. It goes up and down about the same pace, same magnitude as the market. Yeah, TDVI is impressive. Hey, what's up? Jonathan's in the house. Happy you're here. I saw something about you today. You guys are doing some show. What is it? It's Coach. You and Coach and Howard are going to be on or something, right? Or Howard's going to be on your station and Coach. I don't know. Anyway, looks good. I'll try to be there. We'll definitely try to be there. Is it tomorrow? I think it's tomorrow. Anyway, I'd love for you to put the time and date in here so Bond, Health and Wealth, and Dividend Degenerate and myself can all be there. Oh, it's Rod. That's right. It's Rod. That's what it was. I was overlooking in Rod's. I was on Rod's. I was over in the influencer page today, and I saw that. Okay. Well, I'm looking forward to that. I will definitely be listening to that. I had a video out today that I released, but it has 20 views. It's been out like an hour. No one cares about ISSB. 29 views in an hour. I mean, anyway, my station's basically dead. Oh well, what you gonna do, right? Tomorrow at 4:30. Okay. All right. So that's 3:30 my time. So all right, I'll definitely listen to it. I'll definitely listen to it. It's great because Dom, the PM trader, will be there. Who's Dom, the PM? Oh, the portfolio manager. Yeah. Dom would be awesome. So are you going to have an interpreter, or he just has kind of a thick accent, doesn't he? So we'll just have to, yeah. I've never heard him talk, but I heard Howard talk about him, and Howard said he had a thick accent. So I'm not throwing shade. I'm not throwing shade. You care about ISSB. Well, good. You're one of the 29 people. I can count on you. That's what I'm saying. I care about too. I bought it, 2 or 3 days after it came out, and about a week too soon. I'll have to tell you the truth, because I bought it before Bitcoin cratered. But cratered again. Let's just say recratered. Bitcoin's making a craters upon craters. It's made a crater within a crater, basically. All right. Well, did you guys like the Daily Factor tonight? I thought that was a pretty good show. What are we going to have on tomorrow night? But I really think this, though, the thing that surprised me most, and that's why I love this Daily Factor, not really so much the show, but the show's all right. But I like it because I would have never known about TDVI, and TDVI is absolutely one of the better. If I'm looking for a dividend fund, I would have probably got SDIV or NDIV. But anyway, I just like to stay on top of it. Stay on top of whatever's the state of the art. So Jonathan says David will be on the Discord. Do you have your own Discord, Jonathan? I thought you were doing X. But anyway, I need to join your Discord if you have a Discord. Because I'm not on that one, but I'd love to join it if it's open. It may be invite only, is why I don't know about it. That's fine though. That's fine. Oh, on Rod's. Okay, awesome. Okay, well, very good. Well, that is awesome news. All right, so let's look at let's do this. Okay. Check out the old market dashboard. SPY was off a quarter point. Qs were off a third of a point. So that quarter, yeah, SPY did finish on the lows for the day, but it was just down a quarter and it was inside the previous day's range. Well, it wasn't totally inside the previous, but it was a small range. Small range. Yeah, this is the market's somewhat. The market's pretty concerning in here. Doesn't mean it could. It could, change its mind really quick. But let me show you something. Okay, so this is the pros versus Joe's indicator, and it's getting worse. And I mean, it couldn't be any more negative. The fast line is underneath the slow line. We've had the closes are are also underneath. I mean, the last time that it did something like this was, it had this look in October and November a bunch, and those were lousy months to be in the market, and we had a couple of sell-offs. But then it gave the all clear look right here in December. Sure enough, then dips were viable. But what I'm really worried about is, the kind of look we don't want to see is this, where the slow line or the fast line crosses under slow line, and we're picking up momentum on the downside. Now we don't have that kind of look yet. We more have this kind of look. So let's look at the market last time we had that kind of look. So this kind of look, that was January of last year, which wasn't great. We had a flush or two, it was real choppy and volatile, but that was a great all clear signal though, right there. May 5th. I mean, even by the time the signal always gets you out too late. By the time the signal happens, you're already down here at this bottom of this bar. By the time you get in, you're at the top of this one. But I mean, that's 588 to 650 just on that signal. I mean, then it gave a caution signal, and it really didn't nothing really materialized. The market really didn't go up either, but it gave another caution signal back here in October, and that one, or the November, that was a pretty big sell-off. And we got the all clear signal again in December, and we rallied through December, and now we're back we're back putting on hedges, seeing what happens. It can change in a hurry, though. It can change in a hurry. All right, what else you guys want to look at? So let me go back to what we were looking at. No. Okay, so I got sidetracked when I saw UVXY was up 2.7. Let me show you a simpler way of looking at that. Even if you don't like my ratio or whatever, don't understand it, or just whatever the case may be, check this out. You don't have to look at the ratio. You could also notice stuff like this. The ratio takes this into account though, because the ratio, but all right, so that's VIX rising, and that's over the course of, that started Christmas Eve. We start making higher. That's all the way through January. And I mean, really the market didn't go anywhere. It wasn't a good sell. It hasn't been a good sell signal yet, but the market made no progress. So the similar thing, I'm trying to think of another time. So we were tracking the same thing back here this summer. We had it, or September. So from September of 2025 all the way up through October, the market was under pressure and really didn't go very far, choppy or whatever, because VIX was rising. People, but then at some point when this wedge broke, then the market did break out. See, but then you can see over times when the market's going up, the VIX is generally declining. I mean, now we're back in a rising VIX environment. All that's reflected in the ratio. I just like to look at the ratio more. Okay, so gold was down a point, Bitcoin down 3, Exxon, or that's not Exxon. It's oil. It's oil ETF, XOP. All right, as far as sectors go, well, that's never a good sign when utilities are number one. I mean, it's a good sign if you have utilities. I mean, it's not a good sign for a growth investor. Utilities are number one, materials are number two, and real estate number three. Doesn't get much more defensive than that. I mean, healthcare can be defensive too, I guess. Staples, and if it had staples and healthcare in there also, it'd be pretty darn defensive. Yeah, Alan. So Alan's in the house. How are you doing, Alan? I haven't seen you around here in a while. At least I hadn't noticed you coming in a while. Good to see you back around these parts. Yeah, the S&P is only up 8%. So, and if you think about that, you guys saw we had a period of like a month and a half when the VIX was making higher lows, meaning people are worried about it, and it just and then the market did start going up a little bit, but then we're now in another period of inflated volatility. Yeah, I just think the inflated volatility is keeping a cap on the gains. Maybe, I guess. I mean, not really at least the S&P gains. The Dow and other things are doing better than the S&P. But yeah, S&P, and of course that's what VIX is. VIX is S&P volatility. Lots of times I use the NASDAQ also, and I'll use VIX to look at the NASDAQ also, but probably I really shouldn't. It's because it's literally measuring the implied volatility of S&P options, SPX options. All right, so now let's go over here to the individual dividend stocks, and we'll go over here to the income ETF analysis. Now, in case you guys don't know or forgot, I have an affiliate code here, and you get a free month if you want to order this yourself. I like it quite a bit, and it's only $20 a month. Has a lot of tools in it. Has some free tools in it, and it has a free trial. Sign up for it. stocktools.app/max. All right, so this is my favorite tool on here. You just hit select all, and look, it puts all these funds in here: Roundhill, YieldMax, Neos, and then it does a buffer report. It does, and then you could set a different buffer report over different time frames. My buffer report that I show every day is only on one day. So anyway, let's just look at this 1 day time frame to see what the best and worst performing funds were and how they perform compared to their parent asset. The one that beat the parent asset by the most was Winter. Anyway, that doesn't really count. All right, SEPI. Well, no, that doesn't really count. Who cares if you beat the parent? The one that did the best was Winter. Winter did the best. Winter's parent is MicroStrategy, but it's inverse. So Winter should have been up 3.93 since MicroStrategy was down 3.93, but Winter was up 4.13. They got a little bit of extra upside, which is good. All right, Fiat and Coinbase, the same thing. Fiat is up more than it should be based on what the parent is, the parent's performance. Then we have TSLW. Now this thing is catching about 50% more upside. I mean, that is 50%. 2 to 3. I mean, I'm not very good at math, but I think the difference between 2 and 3 is that 3 is another 50% more than 2. And that is, I mean, if we can, if we just do a little bit of rounding up there, kind of squint your eyes a little bit. All right, Snowflake looking good on a 1-day basis. TSLP, obviously Tesla's having a good day because the Tesla surrogates, the Tesla high yield funds are kicking into gear, killing it. Babo, RNTY, of course, on the chart, it was showing that real estate is hot. RNTY is a real estate fund. There's old Taiwan Semiconductor, TSMY. We have Dizzo, I mean, Disney. You can tell the market's going bad whenever you have Disney in winter, anywhere close to Babo, Disney winter, or Dizzo, whatever, anywhere close to the top 10. If this was a good market, it would be all, FEPI, Blocks, Alti, whatever, LFGY, YMAX, YMAG, all the go-go stocks. But go-go is out of style, and now it's all about safety. And it's all about safety right now, and growth, basically. Or not growth. It's not about growth. It's about safety and value is what I was trying to say. But yeah, I agree with you, Alan. It is sad. Don't like drag, but maybe time to buy VIXI. Yeah. I don't know. But I wasn't saying you had to agree with you, but I hear you. I've actually never bought VIXI. I just usually get UVXY, and I usually just get call spreads on it. But it has so much drag or decay, whatever you want. UVXY does. I'm sure VIXI does too. Those volatility products are interesting because lots of products have a little bit of drag on them, but volatility, due to the futures term structure of VIX, has a large helping of drag on it. And it's kind of the same. I think what causes it is the same thing that causes the same reason the VIX drags a little bit, in my opinion, is based on the same thing that causes the SPX to have a little natural inclination to go up. But yeah, it hasn't been doing that lately. 6 months, it's only up 8%. We didn't get that October like everyone was thinking, did we? We sure did not get that October at all. All right, let's do something else here. Somebody the other day was asking about it. We did in the morning thing a paper trade on VIX. I never saw how it ended up. The market's been looking like it's a crash forever. It never does. So I'm trying to see how it ended up. Protection till Friday, or is reversal cues? Oh, I think it's still open. Yeah, maybe it's okay. Yeah, I think it's still open. That's right. So let's go here. We did it in UVIX, so active. I guess I could do it by symbol. Yeah, UVIX. Yeah, and it's open for another 10 days. Okay, so here's my idea for protection. Yeah. So just buying a call spread, you get a 7.5 strike call. It costs 52 cents, which is a ton of money. So then you can go out and sell another option for 20 cents, bring your total cost down to $32. You can get 20 of those, and that's $630. And, if the market crashes hard, it'd have to crash pretty hard. It'd have to crash pretty hard. But anyway, I mean, if it's like a COVID or something happened, this trade would pay off big time. Let's do the same thing for SVXY. I don't like Friday the 13th, so I'm superstitious. We have a Friday the 13th coming up. So yeah, you could go out here on SVXY to the week after Friday the 13th, till February 20th. Right now, SVXY is trading at 54. That 54 strike call is going to be expensive. It's $1.35, and it just protects you for like a week. So you could do something like, go 10 points out of the money. That only brings 18 cents. That doesn't help that much. Let me mess around with the strikes a little bit. Now that might help. That's a 10 bagger if it hits. $37 debit, and you need, I mean, you need a big explosion. Let's see. Let me look at a chart of SVXY. SVXY is ProShares short-term futures. Okay, but it's not the inverse one. It's not the, or it actually is the inverse one, because this one goes the same direction as the market, where UVIX, right, goes the opposite of the market. Yeah, okay. So that one, okay, so disregard that trade. That trade I gave would be the way to play a rally. Right? Because if SVIX's price goes up, yeah, this is -1 short futures. Yeah, being short VIX means you want the market. It means you're betting on the market to go up. It's not a hedge. Not a hedge. So these are so confusing. But buying this fund long, owning this ETF long, is the equivalent to shorting VIX. So buying calls is bullish. Buying puts in this is bearish. So anyway, so let's do this. Just switch this to a put. Switch this to a put. Then you could do something like this. Yeah, something like that. All right, we'll save it to see if that works out. But that's a bet on the market falling apart. All right, so let's do this also. Well, no, let's do that. No, let's not do what I was thinking of. All right, anything else you guys want to talk about? You guys all going to be able to go watch Rod and go watch Rod tomorrow at 4:30. I'm going to be there. I will definitely be there. And then David at 11 o'clock. So the day after tomorrow, David. All right. And then I have just FYI, I know most of you guys know this, but in my Discord, we have a place called Questions for Mike Coe, and he's the next manager interview I have coming up. So I think it's next Monday. So if you have anything you want me to ask him, I've already got two really good suggestions. When are you coming out with more 25% target funds, or which funds are in the works, or something like that? And the other question was a good one too. I forget what it was. But it was a good question. So keep putting those in. As I get new interviews with managers up, I'll put a new room in Discord, and the next one will say questions for whoever the next manager I can get is. I need to get Howard back, or I need to line up a new manager. Anyway, if you guys have any requests, I'll try to get them. But we have an interview for next week set up, because I speak with Mike on Monday. I'll release that Tuesday. We just did the manager interview this week that you guys just saw, or 29 of you guys saw. All of you guys probably saw it, but 29 people over the whole internet saw it. But then we'll do the same thing again next week. We'll do the same thing again next week. Makes you so mad. I put the wrong. I have two versions of it. One that I cut a piece out, and one that I didn't. I put the wrong version up. People watched it. A lot of people watched it because it was world premiere, and I erased that version. Lost all those views. That was probably another 20 views or something, and then put this other version up. That it's just no one's watching it. No one is. I just haven't. No one's watched any of my videos in forever. It's just, yeah, 29 views. I mean, I haven't had I mean, 1,600 views. I got this one in LSI. That was like December. I haven't had more than 1,000 views in like 2 months. I mean, this station's just damn near dead. Just damn near dead. Look at this daily revenue. $1.42, $1.56, $1.78, 53, 53, 26, $1.18. Right here is because Chad gave me $50, and right here is because somebody gave me 20, and somebody else gave me 10. But the this station's dead. It's making $2 a day. Yeah, just I mean, this is just terrible. I mean, when I used to make a video, every video I used to make used to get a couple, 2,000, 3,000 or something. This was a really good video, preparing for the next bear market with K-SPY and KIQQ. I know you guys really like that, and I made graphics, I wrote a script, I did everything the way I'm supposed to, and same thing with this one, ISB, this one too, and I think maybe these funds are dead. I think maybe this niche is dead, is what I really think it is. I think people are done with the high yields. All right, guys. Well, I'm going to get out of here. I appreciate y'all for being here. And yeah, and also the viewership on these lives have been going down. Just everything's going down. So, all right, guys. Well, I appreciate y'all for being here. I hope you have a great night. Remember, not financial advice. Get professional advice from a professional planner. If you'd like to donate, you can do so there, which is about the only way I get income anymore. So thank Chad. I wouldn't have got paid last month if it wasn't, or the station wouldn't have got paid. I paid myself out of a different account, but the station would not have got paid was it not for Chad's $50. And I had two other people. Somebody paid 20 and somebody gave 15 or something. And I'm sorry if I forgot who it was, but I could look it up. But I mean, it's just disgusting. Look at the past 90 days. Look back in November, $40, $26, 17, 11, 7, 12, 11, 6, 5, 2, 9, 10, 11, 15, 9, 30, 20, 11. That's when the station was working well. But it's dead. I just about killed it last year also. So it's kind of an annual thing. All right, guys, take care. Have a good night.